You gotta watch your time, right?
I'm good.
Don't look at that clock.
I'm,
So Mike, let's talk about interest rates. Where are they currently right now?
Well, that's a great question. As far as most people know, the interest rates have gone up since November 1st of last year, right before the election. They're, depending on the type of program that you're looking at, is going to vary as far as the rates. For example, an FHA loan is going to be in the upper threes, where a conventional may be at 4% right now. But there's other things that come into play that dictate what somebody's rate would be as well.
So let me ask you this. Would you say that interest rates have gone up a quarter since the elections? Half? What do you think?
It's approximately about a half a point that it's gone up since then. It actually has come down just a hair since the highest point since the election.
So as a lay person looking in who might have thought interest rates have jumped up dramatically in the last 6 months, they really haven't done that.
No, they really haven't. It's we've grown accustomed to the interest rates being so low for so long that any type of upward movement creates a little bit of a panic, but it's kind of a false panic at this point.
And as far as FHA, I think there's a false perception out there that people think you have to, be low income for FHA, but actually anybody can qualify for an FHA loan, correct?
Absolutely. The way the program originally came about was to help that first-time home buyer get in. It has evolved quite a bit over the last several decades to where it is really for anybody. Somebody that's had multiple homes over the years still continue to go on FHA financing.
But in theory, not that a billionaire would want to go FHA, but there's no restrictions on income, high or low with top cities, right?
Income-wise, no, there
Right.
isn't.
Understood. Got that. With as many guys that are coming back from service right now, obviously we have a lot of VA loans, more than I've ever seen in my 30-plus career. What should the veteran be doing ahead of time? Meaning, like getting his DD 214, which is their certificate of eligibility. I mean, what should he be doing, or she be doing for that matter?
Yeah, the DD-214 is their discharge papers
Right.
that we get so that we can get their COE, which is their certificate of
Right.
eligibility. For a veteran, actually for all, the best process would be prior to going to look at homes, to go through the what we call the pre-qualification process, which means we can just get verbal information from the clients,
Right.
get it worked up, look at their credit, and see where they are at that particular moment.
Got it. So let's talk a little about the pre-qualification process, because I think what a lot of folks still don't realize is that in this market, meaning the real estate market we have, in order to make an offer, you have to have a pre-qualification letter to make an offer. In theory, you can make one without it, but it won't be looked at. So what's the most important things that they should do in the pre-qualification process, besides getting with a loan officer like yourself?
Right, exactly. To go through that, it's really a pretty simple process. We can, of course, do it in person. We can do it over the phone, or today's technology, do an online application. The pre-qualification is basically just verbal communication at this point. Of course, we do review one's credit for eligibility for any particular loan product. From there, and the reason why you do that prior to, because if you find a home that you want, it's a very short time frame, to get an offer in today's market, as you indicated. From that point, then we go to a pre-approval process. We will send them a list of items that we need, typically the very basic items, pay stubs, W-2s, things of that nature. So they can send it in, we can review, and put their minds a little bit more at ease as far as where they stand.
So maybe another misconception out there, what would it cost somebody to make a pre-qualification?
Again, just to get their verbal information as far as their personal information, name, social, their income.
I'm referring to dollar amount, meaning what do they have to pay, if anything?
That's a great question. There is no expense for the pre-qualification.
Because I think a lot of folks out there, especially if they go online, they say we want a $500 application fee or whatever the case may be. And we've shared with most people that you don't have to pay for pre-qualification with your outstanding local lender. So that's where the purpose of my question was. So let's talk about loan limits, because I remember when I first started, FHA loan limit was approximately $65,000. You know, of course, that was back in the Stone Age. I get that, but I was just curious where the current loan limits are and how that affects people.
Well, January of this year, not only FHA but other programs have increased their loan limits. FHA now is at $362,250. I love the 250 part. Where, you know, as you indicated, over the last 15 years is more than doubled as far as the loan limits for that.
And their down payment is a minimum of 3.5%.
It can be as little as 3.5%, correct?
Assuming they qualify.
Absolutely,
Right. Okay.
absolutely.
And then VA, assuming they qualify, also can be a max of 100%.
Correct, correct. There's a little bit of a misconception on VA as far as the maximum loan amount for VA.
Which is right now.
424,100
Right.
for 100% financing. You
Got
can
it.
actually have a higher VA loan amount.
Mhm.
You just can't do it at 100% financing.
Right. But one of the things I think the veterans need to understand is that if they have an existing loan out there right now that is VA, if they want to get another one, it's not a dollar for dollar situation, meaning that if they owe 100,000, they have 300,000 left. There's actually a
Exactly.
formula that would plug in, right?
Correct. That's called bonus entitlement that VA has come out with, where it's not based off your current loan amount, it's based off the amount of eligibility that you've used,
Right.
plus your bonus entitlement will dictate how much your maximum loan amount at 100%.
Right.
Again, you can get a higher loan amount,
Right.
but there would be a formula used to determine how much your down payment would be.
Great. Now, on conventional loans, again, I think a lot of folks think that they automatically have to put 20% down. That's not necessarily correct either, is it?
No, it's not. Actually, it is possible for some people to get it 3% down. You know, the eligibility for those programs are different, but for most consumers, it's at 5%. It can be as little as 5% down.
But they would have mortgage insurance involved.
That is correct.
Okay.
What we call PMI, which
Right.
stands for private mortgage insurance.
Can they still do two loans to bypass the PMI, meaning put a down payment down, get a first and a second so they don't have private?
Absolutely, that is definitely a possibility. It's called a second lien.
Right.
And what that does is lower their first lien loan amount to at least an 80% loan to value, which in turn would eliminate the mortgage insurance that we just talked about.
Now, one of the things I think challenges for especially FHA and VA buyers, just because sometimes the vet's trying to get in for almost nothing, FHA for, you know, again, they're limited with their funds, I guess, more than anything else, would be that on the closing cost issue, sometimes if they're having to ask the seller for closing costs, it can hurt them in negotiations. So why don't we talk a little bit about premium pricing, how that might help them potentially?
Absolutely. Let's start off first off with VA. On VA, as you know, there's certain closing costs that the veteran is not allowed to pay for.
Non-allowables.
Correct, which are known as non-allowables, and that is part of the contract. But with a lot of companies, they still charge it, but they will have the seller pay for it, which, as you know, is going to be difficult for a negotiation
So
purposes.
just to share for a second, if you are offering someone a list price of 200,000, that's their list price, but you're asking for 5,000 in closing costs, they're going to view it, they being the seller, as if you're offering 195,000. So in other words, if there's multiple offers and you say, hey, I'm offering full price, you're really not, and I say that in terms of the way the seller is going to look at it at net. So a program like the premium pricing can help you minimize your closing cost and hopefully improve that offer when you're negotiating.
Right, and you know, going back to the interest rates, for example, let's say it's at 3.5%. What a lender can do is increase that interest rate,
Right.
and then in turn pay part of the closing costs and/or prepaids to help soften the amount needed at time of closing.
So would that be about 0.5%?
You know, that's really a tough number to say because it's
Right.
going to vary depending on how much somebody needs, and for each eighth of a point is the way interest rates work. It's dictated by the market. It's not a set amount.
Okay, so it's really not a general rule of thumb.
No, unfortunately not.
Okay, all right. So let's talk a little bit about rehab loans. So let's say that there's a house out there that is just not in good shape. And it's an opportunity, but the next guy's going, man, I don't have $25,000 to fix it up. Are there options out there?
Yeah, there are, and actually, as you indicated, with the inventory the way it is, there's more homes that need a little bit more TLC, we'll say. We have on FHA, we have what's called a 203K. That's a loan product description as far as being able to put improvements into a property and include that into the loan itself. On a conventional loan, it's a rehabilitation loan or a remodel loan. It doesn't have to be just for remodeling. It could be for repairs as well.
Okay.
Depending on what you're needing done to the property will dictate what could be better for the client. And there's also one that's just a repair escrow that's for a lower amount that we have as well.
So it sounds like the best thing to do in that situation would be, if you have a property like that, would really be to consult with the loan officer, see what guidelines are in play for which program, see if one actually makes sense.
Absolutely, and not only that, that's where your expertise would come into play as well, because it still would have to appraise. Now, it's not appraised on the current status, it's
On the repair.
the completed status.
So for argument's sake, if they're buying the home for $200, but after they do the, we'll call it the repairs and such, now it's at $225, and as long as it doesn't have a problem in its repaired state, appraising for $225, that works.
Absolutely.
Okay.
Absolutely.
Good. All right. So, credit approval. Some people have got some issues with credit. Any words of wisdom on how they can work on that and get that going?
Yes, we're not a credit repair company,
Right.
but we do have a program that we can put people through that will give us a formula on what to do to help improve their score. Now it doesn't indicate that they are going to be approved, but we can pretty much determine, by doing this, if they will be in a situation that they can purchase at that time.
Okay.
And a lot of people, going back to the pre-qualification, that's a great reason to do that up front. So if there are some situations where they need to work on some things, typically it's a 30 to 90 day process. And then they can, and it's not only to get them eligible to finance, but also where they can improve their score, which is another factor on their interest rate.
Right. So, for argument's sake, if somebody right now has a credit score of 620, in theory, they're going to be getting, let's say, a higher rate. But if all of a sudden they are now at over 7 or over 750, whatever the criteria might be, now they're talking about a better interest rate.
Absolutely. It does improve their interest rate situation. Not that it goes up dramatically as far as between a 620 and a 740. And it's relative, of course, but it definitely will improve their situation.
So if someone's looking at getting a new loan, should they be, if they're talking, like say talking to an online mortgage company or a professional like yourself, every time they say, I want to run your credit, does it hurt them? Should they restrict doing that? Because that's a question we get frequently.
Yeah, that's kind of a trick question. In reference to, for example, let's say you had your credit run today.
Right.
And then you talk to ABC Mortgage Company tomorrow and you have it run again. Will that have a negative impact? It'll show as an additional inquiry on your credit, but not a hard hit.
Got it.
You have a certain time frame, depending on the credit bureau, to run your credit multiple times, where it only counts as one hard hit.
So in other words, they see you're looking for a house or a car or whatever the case may be at a given time.
Correct.
And it looks like you're just pricing around.
Right.
That
And it's basically to give the consumer the ability to shop around and to make sure that they're getting the best deal possible.
Right. And I think the other thing too that people get confused on is that when you are shopping around and looking for loans, if let's say you're looking for you're going a conventional loan, and let's say you're buying a $300,000 home and you're getting a $250,000 loan amount. When you're shopping around, make sure you're shopping apples to apples. So in other words, if you see something that looks really good, make sure they're saying, yes, this is a 30-year fixed rate loan at blank percent. So in other words, versus them saying, yeah, if you close in a week, you can get this interest rate. So just make sure that when you're comparing that, you're comparing the same thing.
Absolutely,
Right.
absolutely. And there's other items in there that people know as closing costs, but they're actually what's called prepaids that deals with your taxes and insurance.
Right.
Regardless of what I put in there as an estimate or another lender does, those are all dictated by the consumer and the property itself.
Right.
So those are somewhat irrelevant, but people think that that's a set amount at that particular time when they get the estimate.
Okay, so kind of wrapping this up here. So let me ask you this: what would you say the most important thing that somebody's considering purchasing should do? Like, there's one thing besides the pre-qual. Anything else, or did you say this?
Well, as far as going through the process prior to purchasing, is they want to know how much their out-of-pocket cost is going to be,
Right.
and actually their monthly payment.
Right.
There's a lot of folks that look at it from a standpoint, they think at a $250,000 house, they're going to get a $1,500 payment.
Mhm.
Well, that's possible, but
Right.
if they're doing maximum financing,
Right.
it's extremely unlikely.
Right, because I think what happens too is that people think, you know, they use the old, I say 1% rule. So if you're
Right.
paying minimum down, you're buying a $200,000 house. Of course, interest rates are lower, so it's not exactly the same. But it used to be like, okay, I've got a $2,000 a month payment, and then they're thinking on that same house, if they put $100,000 down, they have a $1,000 payment. And it doesn't work that way because your insurance or taxes are still based off of 200,000, not off 100.
Absolutely, that's a perfect example. A rule of thumb that I somewhat use is for every $1,000 additional that you put down, the principal and interest change is roughly $6 to $7 in the payment.
With today's interest rates.
Correct,
Right.
correct, with today's rates.
Understood.
So people think if you put an additional, we'll just say 5,000 down,
Mhm.
that's going to have a significant difference in the payment.
Right.
Where it really has very minimal. It's anywhere from $30 to $40.
Okay, as we're wrapping up, anything else that you would like to share?
Yeah, if you have any concerns or if you're looking to purchase and you need financing, feel free to call me anytime.
And your phone number is?
It's 817-721-4447.
Email?
mturk, Turk, at Starkey, STARKEY, MTG.com. And also my website is turkhomeloans.com if you'd like to do an online application.
Very good. Mike, we appreciate you being our guest today. And
Thank
just
you.
so you know, Mike's contact information will be in the email, in the Facebook page, and on the YouTube. So again, thank you very much. We look forward to talking to you again. Until next time.